The finance minister has cut the current account deficit target for the present fiscal to $60 billion. So he's really lowered the target. And Chidambaram says that the government's decision to curb gold imports was the best step taken by the government so far.
The current account deficit is likely to be perhaps $60 billion or below. Last year it was $88 billion. And this year, if we're able to contain it at, say, $60 billion or below, that would be a very significant achievement. I know that we have been rather strict as far as gold imports are concerned, but I'm sure everybody will agree that in the long run, that is the best decision that we could have taken. It remains at the level of about 20 tons a month, in which event, by the end of the year, gold imports would have been severely compressed, and that would be a very good sign for the current account deficit.
Finance Minister making important comments there and taking stock of the economy as well. Now, Mrinalini Krishna from ET Now was right there present at the press conference by the Finance Minister and joins us with more details on what really he said. And Mrinalini, FM seems to be quite confident of containing CAD at $60 billion target now.
The current account deficit was one of the government's biggest headaches. Finance Minister P Chidambaram today has said that the current account deficit can be contained to just about $60 billion or perhaps even lower for the fiscal FY14. Remember, earlier the government's target was $70 billion, and this target has been brought down on account of restriction of import of gold, which has been the biggest threat to the current account deficit, and also the slight uptick that we've seen in exports. Now, Finance Minister P Chidambaram has said that while gold imports have been curtailed, there has been a slight uptick in gold imports as far as the festive season is concerned, but he is going to be a happy man if gold imports for every month are restricted to just about 20 tons. Apart from that, he also says that he expects foreign institutional investments to turn positive by the end of this year that continue to remain in the negative, and he expects foreign direct investment to pick up and come in other sectors like telecom, pharma, single brand retail and multi-brand retail, and that is going to assure safe and sound financing of the current account deficit. Now, with the target having come down and the government hopeful of being safely able to finance the deficit, there doesn't seem to be a possibility that the government will have to dip into its reserves. In fact, the finance minister is confident that perhaps there could be a good accretion to the forex reserves as well.